If the bank is paying you 1 to 3 to 4%, at best double that. And anything past doubling that is going to have a lot of risk, no matter what anybody paints or says about it. In order to pay you or make something that's 12% now when banks are paying 3%, there's substantial risk of principal, and let nobody fool you differently.
Welcome back to Collapse Life. I'm your host, Zara Sethna, and I'm thrilled to have you with us. As we kick off 2025, economic uncertainty is looming large over not only America, but all over the world. Our guest today is someone who has spent decades analyzing markets, trends, and global forces, and helping people navigate through turbulent times. Peter Grandich is a veteran financial expert, author, and founder of Peter Grandich Company. Today, we'll explore his outlook for 2025, discussing everything from debt to gold, cryptocurrencies, political turmoil, and shifts in global power. Welcome back, Peter. Thank you for joining us as one of our first guests in 2025, and Happy New Year to you.
Well, first, Happy New Year to you. More than pleased. I know the work that you're doing is needed. And so doing this is an honor for me more than anything else.
Thank you so much. And as our viewers know, you've been on this show a number of times in the past, and you've always been telling people that we need to prepare for what's ahead. Last year, you told us that we will be facing some of our most dire times to date. So I wanted to start by asking you, are you still feeling this way? Has anything changed for you since the elections?
Well, I am still working on my ARC. Uh, right after the election, it appeared there was at least half of the population feeling there was going to be no more need for an ARC. But I do think a lot of that initial enthusiasm that occurred has weaned down to a more realistic uh, revelations. We've now seen much of the gains that were made in the initial days in the stock market given back as you and I speak. And what was interesting about that time was I always coined that Thanksgiving to Christmas, the say no to bah humbug period. It's always tilted to the bullish side on Wall Street. You know, my favorite saying is you can toss a lot of financial advisors off the top of the Empire State Building, but all the way down they'll all say the same thing. Hey, so far so good. And that tends to be overstated during that period, yet they were able not to hold the market up during. And then the fable that is always created every year, the Santa Claus rally, which is the 5 days immediately follow Christmas. And as you
Uh-huh.
and I speak, we're in the final one, and the four first were down. So uh, what's left is still obviously the enthusiasm that Donald Trump brings dramatic change. Now, I do believe he's impacted two of the 10 reasons that I had to build that off, that they're not critical anymore, at least for now. One is the immigration. He's clearly going to take a much needed and better approach to the immigration situation. But I think a lot of the damage has already been done and can't be unwound.
Mhm.
And then the second is, thankfully, the freedom of speech and the cancel culture and wokeness that just dominated clearly through government and through much of the mainstream media will be tempered, if not greatly depressed. Those are two things I think that are important. But the three that to me, and the third one now to me is moving right up with the other two, and it may even be a surprise to you, although I know you read my work, so it probably won't be a surprise to you. But the first two that still remain, and they're ones that, unless there's divine intervention, I don't think they're going to be fixed. The
Mhm.
one is the out of control debt spiraling that we're having, not just on the federal level, which is bad enough, but on the state and local level, corporate level, and consumer level.
Mhm.
The second is the retirement issue. People do not realize how critical it is when two-thirds of the workforce are working paycheck to paycheck. They're aging. I can tell you now, as I approach 69, it's a lot harder to do day-to-day stuff than it was when I was 39. And that's the same thing that's going to face two-thirds of our workforce who are going to rely more on government as they get older.
Right.
Third one is the thing that I think we're going to unfortunately need another serious catastrophe or two before Americans start to embrace it and understand how bad it is. And that's the crumbling infrastructure in America.
Mhm.
That is not talked about. It's certainly not going to be talked by the don't worry, be happy crowd on Wall Street. But we're seeing it all over here in New Jersey in the last week or two. We had 10 different towns where water main broke. and were flooded. Businesses couldn't open, traffic people couldn't get to and from work. And the reason that is, in New Jersey, the average water pipe is over 75 years old
Hmm.
in the major cities. There are bridges, a whole seriousness of stuff. So those are the main reasons, and others why I am still working and trying to convince people. And of course, as you know, both our favorite topic, and that is reducing and getting out of debt. Debt is the worst four-letter word in the vocabulary. It is the reason that we are in such critical shape, and it's not just in the United States, it's in many other places of the world.
Yeah. I want to take all three of those kind of one by one, starting maybe with infrastructure, which is the new one that you're kind of bringing to the table. Um, I mean, there's just not enough money to put into all the works that need to get done. But do you see maybe the Trump administration bringing infrastructure to the table as part of their agenda? Do you think there's going to be a big works project?
Well, let's go back and let's remember, for those of us who were around, and remember, our workforce in the financial service industry is quite young. I like to bring up attention now that we're approaching nearly 50% of all people giving license to give financial advice weren't even born when I started in the business. I
Wow.
think that's a separate issue. We can maybe address that later. But back in 2008, when we had our last major financial crisis, Bernanke and Obama got together and made an announcement of this new thing called quantitative easing and funding, with the promise that much of the money would go into the infrastructure crisis, which was already viewed back then, 15 years ago, 17 years ago, as a crisis. But a lot of it didn't make it there. It stayed
Mm.
on Wall Street. And now multiply how much worse things have become. So whether or not the Trump administration actually wants to tackle it, I have a problem right now, and it causes a little bit of friction in my home because my wife is a Trumpster. I'm not a Trumpster. I'm
Hmm.
not against him. I voted for him, but I voted for him because he was a much better choice than the other person that I had to choose from, not because I thought he was going to be the answer to everything. But the problem is that Donald Trump has taken on a spend attitude in his first administration. He's talked about that now. He's talking about giving everybody the tax break and not have to pay taxes. And yet, there's no answer to addressing the deficits that now are running 2, 3 a year. But let's not forget one important thing, and I know you don't, but I think it's very important for anybody watching this. We have one last bastion of independence in Washington. It's called the Congressional Budget Office.
Hmm.
It literally is not totally woke or controlled by one party. And early in 2024, and then they actually increased it, they put out a very concerning report that they see the national deficit going to $54 trillion dollars in as early as 8 years from now, without any recession, serious recession or depression. So if we have serious recessions, that'll happen that much faster. When we start talking about 50 trillion and we just put a 5% interest on it, that's $2.5 trillion dollars in interest expense. The best year we ever had as a government, we literally took in just about 5 trillion.
Wow.
So at that rate, we would have almost half our money just going to pay interest expense. The government, as we know it, whether it's Donald Trump, whoever it is, won't be able to function in any manner close to what we've been used to.
I mean, debt, as you said, it's almost like unless there's divine intervention, it's the problem that can't be solved. Or maybe you have ideas on that. So I guess I wanted to ask you. So if you were in a position to advise the Trump administration, and stranger things have happened with this administration, maybe they will call you. What would you recommend they do day one to start stabilizing the economy and boosting investor confidence?
First of all, I must declare to you, and I know you know this, but to any viewers, is that much of my work is built on a biblical foundation.
Yes.
So I don't seek or believe man itself or woman will be able to solve things in their own strength and their own human nature. I believe we all do. We have a very failed human nature and a sinful nature. And the fact that this country continues to move away from that type of belief, and less people believe that, I believes making solving the problem even that much more challenging, if not impossible. Having said that, I think there's two things that can happen. They won't, but they be the foundation needed to fix this over the next generation. Because listen, it's going to take a generation to fix it. It's not going to
Mhm.
be something that's going to be fixed in months or a few years. It will be decades. I'll be long gone, and I don't, please God, you're still around and your husband, but I think it's at least a generation. But these are the two things that needs to be taken. First of all, there has to become term limits. We cannot have people in government just becoming multi-millionaires. I mean, can't tell you how many Congress people go in and have no money and come out worth 10, $100 million. But also the fact that term limits, I think, would make them focus on getting things done versus, in a sense, milking it for what it is.
Mhm.
And then is we have to have a constitutional amendment that we must have a balanced budget. It's like what I talk about, in my own planning. You have to spend less than you make.
Right.
That's this. People ask me, what's the key to financial planning? Well, first, I believe you have to base it on biblical, but even if you want to just take a secular, you got to spend less than you take in.
Yeah.
Because if you're not, there's nothing magical any financial planner can do if you're going to spend more than you make, because sooner or later you're going to have a big problem. And so those would be the first two things that I would tell him to try to get across. But I don't think anybody is prepared or willing to do that that's currently there. And that's why I think unless there was a wholesale change and suddenly a whole bunch of new people came in and they were able to say, yeah, this guy Grandich sounds right, let's do that. I don't think it'll ever happen in my lifetime.
Yeah. So, do you think that with this new administration, we're going to get a lot of bluster and talk, but not a lot of action? Is that kind of what you're predicting?
Uh, Trump is a man of action. We might not. There's half the people that hate him for his actions, but he's not just a talker. He believes in something, and if you're his friend and if you go against him, you're his worst enemy. There's no middle ground with that man, and I really believe he has intentions in his mind and in his heart on how he thinks things should be done. The problem what I have is this, and I don't. I hope the worst scenario doesn't even come close to happening, though it almost happened twice. And that is the people who have spent the last 8 years, from the time he first came down that escalator when he announced his first run for presidency to now, is a very significant and large group that, in a sense, wish him dead. They
Hmm.
certainly don't want him as president. They certainly have tried to do things to prevent his presidency from happening again. And I don't think come January 20th, they all just turn to each other, okay, we tried, let's go
Yeah.
on with life. I think they'll actually accelerate their devious ways that they sought to be. So I think that's a challenge. But here's the other challenge that is not on the books right now. In 2 years, less than 2 years now, we're going to have another congressional race as we do
Mhm.
every 2 years. There's always a tendency that there's a little rebound from the last one. So Republicans just kind of snuck over the line and just got a very thin minority.
Right.
That may be challenged within 2 years, which would then make it more difficult for his following 2 years. But we also have a bunch of Senate seats that are up for election as well. And this time there's more Republican held seats that are up for election. And the reason I bring that up is if he doesn't get out of the gate, if there starts to be hesitant and people starting to think, oh, we have some surprises negatively, economically, and all, those people are going to back off their support to him. They may
Yeah.
not want to be seen in the same picture with him as well. So the Trump administration, in order to achieve a lot of things that people bought into the night of the election, needs to get out and get out fast. And what I've seen so far is I think that's more unrealistic than realistic. I hope I'm wrong for the benefit of the country, but I actually think it's going to be a lot more of a challenge, and things aren't going to be as easy as some assume on Wall Street they're going to be.
Yeah. Yeah, it's such shifting sands. I mean, the last time we were talking about political polarization being one of the major risks to the country. And then the election happened and some of us started to think that maybe we weren't quite as polarized as the media wanted us to think we were. I mean, when you saw the results of that election, I think it sort of showed that there's a there's a similarity amongst just, the average American, that things were not going the way they wanted, and everybody wanted change. So maybe we weren't quite as far apart as we thought we were, or that we were told that we were. However, as you say, I think there's a lot of hope, and if that hope doesn't turn into reality really quickly, it could fizzle. So how do you feel about that risk right now? Has your thought on that polarization and that tension changed at all?
Well, political pundits will make a living and get paid quite well to debate what you and I will just discuss now for a couple of minutes. But I think it's a combination of people that were also just so sick and tired of what was presently existed. And when you looked at who he was running against, how anybody could imagine that that person could bring a better opportunity, I think is really played into his strength.
Mhm.
The same as if Biden had stayed. I think obviously what many of us thought 2 years ago became clearly apparent. And also, the Democrats didn't really, you didn't know what they stood for. Like I said earlier, you knew what Trump stood for. There's no, he doesn't hold that back. Now, if you want to disagree, you can do that in the voting box and all. But those who agree with him strongly agreed. And the Democrats did nothing. And in fact, they did a lot to hinder any unification of the opposing view, so to
Mhm.
speak. And that's because the Democratic Party became very, very so left. I like to say that if it went any more left, they'd be right. And that is something that they're going to have to address, and address pretty quickly, if they're going to be formidable as the next elections come. But right now, I do agree that there's not as much hate, because the people who are spewing the hate, not only have they been hurt, but the group that allowed them to spew the hate, the major media, they've been banged up too. Look at the drop in percentage of followers on those networks.
Yeah.
They've lost 2/3 of their viewing audience, some of them, which clearly states that they did not. They didn't present to people a so-called fair and balance, as another network likes to say, and all.
Yeah.
So while it's true, maybe on the surface, some of the polarization isn't bad, I don't think that group, that hardcore, this group that likes him. And let me tell you this, and I think this is very important. It's great that there's two entrepreneur people that want to go into Washington, D.C. and get rid of all the excess and the horrible way government is run and all the other things that it stands for. But I'll tell you this, I would sooner expect to see the Giants playing the Jets in the Super Bowl next year than them being successful early on and making wholesale changes.
Right.
Uh, this has been embedded. It is on both sides of the aisle. And there are whole people that will not benefit from such the changes that they perceive. Will they achieve something? Yes, I think there's a lot of excess that they can look at. But one of the problems with that is there's still no austerity in anybody's talk going forward. And I think what we'll also hear, because remember, Trump did this just before COVID.
Mhm.
People forget that Trump's great tax break that he gave was done on the basis of his own words, because the economy that much stronger. And even though we greatly increased the debt, we'll produce that much more in the country and make more. So we'll be eventually be able to pay down that debt. That
Mhm.
was the argument. And it's an incomplete check mark because COVID came. So you
Yeah.
can't argue whether or not he was on the road to success of that. I believe that's going to be his same motto here, that yes, we're going to have to spend and increase the deficit. And we'll hear that once he's in, all for the betterment down the road, which
Mm.
you and I have learned and have stated and believed that that is not what's going to happen. The first part may, but not the second. And that's what got us here. Remember now, people forget the Graham Rudman and all the things that I remember through my career, because a lot, like I said, financial advisors were in kindergarten when that stuff was happening. But we've had attempts to balance budgets. We know people forget the last one, if you want to call it balanced, was Clinton. That's
Mhm.
the last administration that we had. And so all these things are enormous issues that while the intentions may be there, the abilities to achieve them, I think, are going to be greatly hampered.
Yeah. If we just look outside of our borders for a minute, how do you think global markets are going to react to the incoming administration, and also on the geopolitical front? How will other countries react? How will that sort of change things and maybe impact your outlook as well?
Well, it's funny. The geopolitics for a lot of years was taken out of the day-to-day talk among the financial community. But because of what's occurred and COVID made it come back into at least consideration on others other than groups like myself that always focused on it. But one of the things that was lost in all of this is that still our biggest trading partner is just to the north of us, Canada. And there's not a lot of discussion about Canada, although many Canadians and anybody that still follows it, like I do, I even once wrote a newsletter about investing in Canada. They have a more dire situation than even we do. And there's clearly a change coming, and that change is even more needed than the change that we needed. But it's going to take a lot of work by the new group to kind of stop the bleeding that has been going on there. And that's critical because they're still our biggest trading partner. But I think the focus will be and will continue to be on China. And of course, my favorite topic when it comes to geopolitics, the continuing growth of the BRIC movement around the world. China's at an interesting point now. It's facing some strong economic challenges at a time when its leadership has just come out now and said, and everything they've always stated in the past, they went forward with. So there's no reason to think they won't on this, but they've now called for such an increase in their military and their strength in military that hasn't been seen in a country since Germany in the 1930s. They've also been unequivocal about and stated it again just at the new year that Taiwan and China need to be both the same.
Mm.
That's a very, very important point, not just because of where it's located, but what Taiwan provides to the world, which is the world center for chip manufacturing. And so much of the movement in our U.S. stock markets on the basis of AI and chips and things like that. So Taiwan is something that's important, and they're basically saying that they're moving forward with that now. How they plan on doing it, I don't think is with a rose and a box of candy, but how they do it, and while Trump is president, may forestall some of their movement, but it is something I think wising. But the BRIC movement is something that's not only here to stay, but is something that as the fall comes in and their next meetings start, people are going to realize how advanced they are and how formidable they are becoming and what that's going to mean to the United States economically, socially, and politically.
Yeah, let's talk about that. So BRICS, we've talked about before, is again being one of the sort of major risks that you put on the table for the U.S. and the economy. That BRICS nations still are challenging the dollar's dominance, but it seems like they're mitigating that pressure a little bit. Some there were some thoughts that coming out of their meeting last fall that they would present a fully formed plan for a new currency, which hasn't yet happened. I think they're working behind the scenes, but publicly it hasn't yet been introduced. And there's in India there's some discussion about Indian industry kind of wanting to take a little bit more of a softer approach, Russia, et cetera. So do you think that things are slowing down, or is it just kind of quietly happening behind the scenes in terms of the impact of the BRICS nations?
First of all, I think the talk of the new currency or gold backed currency really has come out of the mouths of people who benefit from gold going up. I don't yet see anything from any major player on the brick side that was something that should have been expected 2 years ago or this year or even come this fall. I think they've been measured in what they're doing. I think they've also done it under the uh, stress that the Ukrainian war put on Russia. But I think the actions that this administration took and its allies became the greatest marketing tool, other than what Trump would say 24 hours after the election. So let's take the first one. The selling point to a potential country to join BRIC was and still is, hey, listen, look what the United States did to Russia. Not only did they help lead to take their assets, but now they've gone and taken the interest that it earned and gave it to Russia's enemy.
Right.
Who's to say they're not going to do that to you? Okay. Can't take that away. That is a concern. And that's what one of the concern selling points. But Trump went and gave them another marketing tool. Now they're not going to get into a war of words with Trump because no one wins in a war of words with Trump. And I think they're smart enough to know that. But quietly behind doors, they're going to say, look what he just said. He just said he's going to basically cut you off at the knees. If
Hmm.
you don't do what he says, you're done. That's another reason why you can't go that way and why you got to join us. So quietly, I believe Trump helped accelerate it. Now, you're not going to see them going in the major newspapers and talking about that, but behind closed doors. And we'll see if I'm correct come the next fall meetings when there's still more countries joining. They're moving more forward and identifying how they're going to trade and so forth and so on. And is Trump looking as good come September and October as he did on November 5th? And so I still think the BRIC movement is a serious movement. I said 2 years ago it's going to take 3 to 5 years. We're only going to reach the third year next year. But every indication I have is that is moving forward and is going to be a formidable challenge to the United States. And I believe the United States will outside looking in. And for everybody who says it can't happen, that's what's happened over a couple of thousand years from the Roman Empire to the Spaniards to Great Britain and the United States. And no one ever stays in charge forever. And, one of the things about it, and I always say this to my wife, who's a true MAGA person, I always say, you guys should just change your slogan a little. Don't make it make America great again. Make it focus on America again. He does do part of that, putting us first. Don't worry about the rest of the world. Try to get our own house in order before we think we can tell other people what they should or shouldn't be doing. And
Hmm.
I think and hope that Trump will do more of that than try to be a player on the world stage at a time when many people around the world no longer look at America as they once did, nor are we welcomed in as many places as we once were.
Yeah. What other sort of geopolitical things do you think we should be watching out for in these first few months of 2025? I think, and correct me if I'm wrong, but I think you've been hinting at potentially the collapse of the European Union.
Yeah, Europe is a basket case. When I entered the business in 1984, Germany and Japan was going to be the economic powers that ruled the world. That was the concern that everybody had, and one of the reasons other Western Europeans united, Germany was such an economic powerhouse. Germany is just a basket case now. In fact, their government's going to lose. The current present government's going to lose badly in the next elections in February, and I think are going to make wholesale changes. But I think what's happened is countries have realized that all these different countries with different cultures, different ethnics, are all having a lot of their own immigration issues as well, feel that they've been hamstrung by being in this union. And I think some of the potential early ones to break out of that is a country like Italy and all. And once that starts and one is brave enough to go forward with that, I think they're all going to fall in line. Plus, the European Union in Western Europe anyway, there's no strength at all. In fact, a contrarian, I think it's a little too early yet, but the valuations being placed on European countries versus similar companies here in the United States has never been this drastic in my entire career. I mean, if I was a very sophisticated trader, which I'm not, never was, never successful, but one of the implementations I would make at this point is if I had to be exposed to equity, is get long Europe and short the United States.
Hmm.
Because over the next few years, I think that spread is going to shrink. It's not going to be as wide, but I'm not telling that's what people should do, nor
Right.
do I plan on doing it. But you're right. I think the EU as we knew it is done. I like to say in my comments, put a fork in it. And I do think within a year or two, we may actually see some movement to either restructure it or actually see one or more countries try to remove itself from it.
Yeah, I mean, it's all happening so quickly. The way we thought the world was structured just a couple of years ago is completely changing. So with BRICS, the breakup of the European Union potentially, and then these other little kind of mini coalitions happening. We just wrote about in Collapse Life. Recently, the new formation of a coalition in West Africa, and those three countries wanting to remove themselves from the ECOWAS. So there's all this change happening. And I think those of us who are aware want to kind of keep track of what's happening abroad and how that might impact us. And at the same time, we've already had a very tumultuous beginning of 2025. And so we want to keep our focus on what's happening here. So it's definitely, as we had predicted, as you had predicted last year, we're going into a very volatile time. Talk a little bit about how people can kind of brace for that, and where you think we as individuals should be putting most of our focus, kind of as the train is rolling towards us on the track.
Okay, so let me eliminate my future Christmas cards for most people in the financial service industry again by telling you that one of the biggest concerns I have is both not only investors but the professional community has had a giddiness and a complacency at a level that I never witnessed at any other time in my 40 years in this business. And part of that issue that I talked earlier when we started this interview is my concern is that a lot of the financial advisors out there have really only learned to drive, in the best way to describe it, on a one-way street. They're very good at it, but as long as the car just has to go straight and you just hit the gas pedal, they'll do okay. The problem is that inevitably two-way streets come upon us in traffic circles. And my concern there is that they don't understand or don't know how to encompass this geopolitical uh, things that we spoke about and how it will play a role in it. I think too little is spent on continuously training and educating financial advisors on the educational part of our business, and more time is spent on getting them to be better salespeople to create a better business for the people that they work for or work for themselves. And I think some of the things you and I just discussed about would be very hard for people to understand. And I bring this as a prime example. In late fall, I was asked to speak to a group of financial advisors, and everybody in the room that was there was under 40, some under 30. And I was just sitting at the table, and the person that was about to introduce me did not make known that I was the speaker. So the people sitting there just thought I was somebody else part of the group. And when the person introduced me and said that I was going to be speaking about the potential of how the BRICS can impact our investment, one young financial advisor turned to the other and said he's going to talk about the housing industry. And it's kind of sarcastic, but it is kind of an indication, and was another indication to me that you don't get a discount because the person or group you're using for isn't experienced or as successful as somebody else. In other words, you don't get the stock for a cheaper price, you don't pay less for that, and so forth and so on. So I think one of the things people need to do is either don't fool yourself that you're as smart enough to do it on your own, and or the people that you're counting on, how really good and knowledgeable are they? And, if I've been in the business 40 years and there are 20 or 50 people that are willing to say publicly as we share, oh, we think Peter, then something's wrong, And so if a person has 200 clients and 10 or 20 aren't willing to publicly say to somebody else, yeah, I would recommend this guy or gal, he's pretty good. I think this experience thing is going to come back to bite us. I really do. I see it all the time now, and people say, "Well, that's easy for you to say. You're an old man," and I get called worse that from the cryptocurrency people, which will give you an open door now to ask me about it. But the bottom line is, yeah, things change, but a lot of things don't change. You know, the old line, this time it's different. No, it may be in a different version, and it may play out in a different way, but the basis to whatever that situation may be is still the same. And I think the combination of that and the complacency and the belief that everything just goes one way. I give you a perfect example, and I don't want to take you off where you want to go, but what the Federal Reserve was and the power it was when I entered the business versus now, it's dramatically changed for the worse. I like to say I was watching during the Christmas season The Wizard of Oz. Hadn't seen it in a lot of years, and I remember watching it as a kid. And I remember before they thought the wizard was just this all power, all everything, which
Yeah.
that was the Fed view until a few years ago when they adopted this transitory belief, which no, that word can never be said again in any Federal Reserve building. But the bottom line is when they pulled the curtain and they realized the wizard was just that's what the Federal Reserve is now. They're not the power that they were, and they're not the influence and all. And quite frankly, I think Trump will try to beat that down even more. And I would not be surprised that there can come such a fight that Powell may not even last to his end of his term because of the pressures that the wording that I think once Trump is sitting in the White House. But why I say that all is it goes back to is I don't think the average financial advisor understands that or even could start to explain to their potential client how is money created? How does it work? What does the Federal Reserve do?
Right.
They might just have enough sentence or two to come across, but then the depth is very limited. So I think experience is going to be a very, very important part. Now, if anybody thinks I'm here to tout my horn, I can just tell you I don't plan on being in the business 5 or 10 years from now. I'm going to be 70 before too long. So I'm not trying to create a better career for me, but I
Mm.
am speaking from experience. I think it's going to be very, very important that whoever you're using or whatever you're aiding to do the things yourself from, to make sure where you're getting that from is thorough and what are their potential biases. Because here's the thing I'll tell everybody nobody I know of, yet to see it yet, that does all this for nothing.
Right.
Something is in it for me, just as it is for everybody else. And keep that in mind too.
Yeah, 100%. Well, you opened the door to this conversation, so let's talk about cryptocurrencies. Look, like them or hate them, and I know you've been very critical of them, and especially of the idea of Bitcoin as a reserve currency. But they are part of the conversation, and especially with this incoming administration full of kind of tech bros, cryptocurrencies are on the table. So, what is your take? What role do you see them playing in the broader financial system? And where does that leave those of us who kind of still believe in real money?
Well, in every crazed period in history, there was a product or products or a belief of people that went beyond anything realistic. And that's what cryptocurrencies become. First of all, let's talk about a couple of facts that we know. A lot of money has been lost in cryptocurrencies. You may still be hearing because of, I think, the greatest Ponzi scheme marketer that ever walked on the earth, who was the biggest believer and the person that they quote the most about it. But there's been a wholesale amount of dollars lost, an unbelievable amount. Let's not forget it was just a couple of years ago, people were buying real estate on computers.
Hmm.
How much was lost in that, and now mem coins. And I think historians are also going to look back and say, listen, we should have known something was wrong when they were naming coins farts. I
Yeah.
mean, seriously, I don't mean that to be nasty or anything, but that's the extent of what it's come to. I'm certain at the peak of the tulip mania, there were people being viewed as Mr. Tulip or Mrs. Tulip themselves. But the bottom line is the first thing that made me turn against it is the manner in which the key spokesperson went about themselves. Here was a person just a couple of years ago telling everybody sell your stocks, your bonds, your real estate, borrow against your house, and if you're going to buy cryptocurrencies, buy only one, buy Bitcoin.
Take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin.
Economic investing rule 101. You never put everything in anything. You
Yeah.
don't put everything into dry food, ammo, none of that. You have that's the first thing. Okay. The second, it's been an investment product that has continuously searched for a viable reason to support why it's going to be. Remember, it was at first going to be something that was just going to be used in view of money. Everywhere you're going to go, you're going to be able to use Bitcoin. It's not going to be because the technology has never gotten to the point where it allows that. Some of the newer things may get to that point, but it won't be Bitcoin. The second thing all is some of the people who were once adamant against it suddenly said it was better than sliced bread. Now, one happens to have the last name of Fink. Now, when I was a kid, they told us never trust a Fink. And in this case, I think they were right. Because not only did this person a few years ago basically call it criminal, nothing changed in it. None of the technology or anything. What changed is the company that he runs realized they could make hundreds of millions of dollars by trading it. And I tell everybody is if he's so convinced that that is the new answer, take all his compensation, including the compensation that the exchange trade funds make, take it in Bitcoin. Don't take it in money, which they still do. They take it in money. But more important than that, it's really nothing more, in my view, of multi-level marketing tied to a Ponzi scheme. And how brilliant this guy is, Saylor. Don't get me wrong. I think Bernie Madoff sits in hell totally envious and jealous what Saylor's done compared to what he was able to do. He found a way to self-propel his Ponzi scheme by getting a company that people invested in, took that, buys Bitcoin, that causes the value of that stock to go up to allow them to get more money to borrow against to buy it, and in a sense becomes a self-fulfilling prophecy. The issue will come down to this, and this will decide whether or not Peter Grandich was right or wrong over the next couple of years, whatever it's going to take to run this course of this thing. The people that still have money and the people that are moving money around the world are central banks. That
Mhm.
has not changed yet. I can't say it won't, but they are not only not buying Bitcoin, but they're buying gold like it's going out of style.
Right.
That's the main reason gold has done as bullish. Remember now what I done back at the end of 2021. I decided to sell all my general equities but one on the belief gold was going to go up in price better than stocks and bonds. And guess what? It has.
Mhm.
It's had a gain that even I didn't expect in terms of percentage wise. Why? Because central banks recognize two things. And this I'll stand till I'm blue in the face or I'm overrun by crypto nuts. The bottom line is they recognize that paper assets in general are in trouble, particularly certain countries, including our own. That's why they've been liquidating treasury bonds and things of that nature. And second of all, eventually, this whole world debt problem, which we didn't talk about, it's not just the United States that's heavily indebted. The whole world is going to have to be solved with a new type of system and a change. And whatever that change is going to be, whoever's going to participate in it is going to want something more than paper.
Right.
Gold worked for a couple thousand years. They looked around and said, you know what? It's still the best thing around. And so that's why the talk of it, Bitcoin becoming a reserve currency is just promotional marketing stuff
Yeah.
and kind of stuff. Because how could you make something that's so volatile and so swung in deep thought without any substantial track record? People talk about, oh, look how much it's up percentage wise. But people don't know this. And you're too young enough maybe to remember this either. But the penny stock movement in the 80s was built around the same concept. A few people got involved with a penny thing. They traded it. They got it up to $2, $3, $4. Then they came out with the story about why this thing is going to the moon, and that brought in the public. That's the
Amazing.
same thing would happen with Bitcoin. When they tell you, oh, it's up 3,000% or whatever the number is, you know how many people participated in that? Not that many. The
Mm.
average person who has bought Bitcoins to cost is much higher than a dollar, or when they say it was a few hundred or a few $1,000s and all. And in just a couple of years, it's gone from 60 to 70,000 to a high to a little over 100. That's great. But you know what? There are stocks that done even better than that with a whole bunch of people participating. So I just know you bet against it. And I'll give you the last example. And it was a shame that this person who I have great personal liking for, and I'm not going to name them, but was a big diehard on silver, ran a very everyday YouTube channel followed by tens of thousands of people. Every day, silver, 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 silver. Silver again, disappointed some again, and we can talk about that.
Mhm.
A couple of weeks ago, has now turned everything into backing one of these so-called fart coins. And those are the type of things that happen at the top of movements, not in the early stages of the movements. Not to say that it can't last for a few more days or weeks or even months, but that is not the point in time. And that's why I think, and my whole attitude on for our financial planning group is, what's changed most dramatically? People have asked me, I got asked this the other day, what's changed most for you as a planning person, all in, say, the last 20 or 30 years? Up until about 2, 3 years ago, the primary purpose should have been trying to make capital appreciation. Now you need to focus on capital preservation. It's not how much one's going to make, it's how much someone doesn't lose.
Yeah.
That will be the difference on whether they win or lose. So I went a long way. I've not taken the time to explain my Bitcoin, but for you, I'd be more than glad to have done that. And can it still work? Can it still go higher? Will there be survivors of it or different forms? Yeah, I think blockchain technology is here to stay. But you bet against people like Saylor and Kaiser. You don't bet on them. And that's just the attitude that I'll take. And if I'm wrong, I'm wrong.
Yeah. Um, I think I want to bring it back to kind of John and Jane Doe, and pick up on that point that you just made about capital preservation. We just spoke with someone recently who was telling us that he had about $300,000 in savings. He put some of it into the stock market, went up to 350. He was feeling good about it. And now he's back down under 300,000. And so it's like gambling. It's like he went to Vegas with that money and just kind of took a chance. And so I just want to give you a chance to kind of reiterate your thoughts for, I mean, you mentioned already the retirement crisis, and we've talked about that quite extensively before. But for someone who's looking at retirement in the next couple of years, someone who's amongst those people who are living paycheck to paycheck, what are your thoughts, words of advice for those people?
Well, unfortunately, there is no magic formula for them. And I get that, especially from the network that I go on Catholic radio, because I hear from people that are struggling even just to keep the lights on. And I wish there was a secret formula to unwind that, but there isn't. That's why food banks are being overrun. That's why people are in such debt that defaults now on cars and other things that credit is used for are reaching levels we haven't seen in years or decades. And that's all part of what I call the two-tier world that we live in. There's 5 or 10% of the population that lives in a very good world. The
Mhm.
wealthiest of people, or people doing extremely well. But a lot of those people have no real idea of what's happening in the other part of the world because they don't interface with it all. I don't think Jeff Bezos has any idea about the average stuff that you and I, or most of the people watching this, will face each day and so forth. So that's the first problem. And Wall Street caters more to them than they do the other crowd.
Yeah.
I wish there was an answer. I do think there's a couple important things. I think some of the decisions you first have to make, uh, that person or anybody else like that, is how are you basing your views on? Is it secular or is it spiritually led? I think they go down two different roads. I think people that have a true spiritual belief, and not necessarily just Christian, but met other people of other faiths. I think you approach things different than someone that just thinks this is it. Nothing else matters. When I go, it's all gone. That's the first thing. The second thing is, if you get past that, we go back to what I said before. Less is more. That's the motto I consider my business life built on. I could get a bigger home right now. I could get a bigger car, but I would have to spend money or maybe even have to borrow money to do that.
Mhm.
What more will I get out of that than I get right now? Certainly at 68, I think of far less things I need now than I thought at 28 and 38 that would make me happy, or what the world calls me to do, or what have you and all. So I think you have to come to some understanding about what we want to do. I still see 7 or 8 out of 10 families who come through our doors spending more than they make. And I think I can't emphasize that enough, that that has to change, not only on the government side, but it has to change with us.
Mhm.
Second, any type of debt reduction that they can make. Because two things come out of debt reduction. One, less money going out the door. But everybody that you ever meet that's reduced or greatly eliminated debt talks about a lifting of a mental and physical feeling unlike anything they might have experienced since they first fell in love.
Yeah.
And it's true. And I think those are critical first steps for people to work on. Once you've done that, then I think you have to start understanding that markets are somewhat overvalued depending on where you look. Some are extremely. And can you do better controlling your own destiny versus betting on somebody else that you have no control over? I
Mhm.
meet a lot of business people in our planning, and I really discovered that money only comes from five ways, if you don't mind me sharing this. The first is they inherited it. They're not the person that made it. Someone earlier in the family tree made it. Second, they were small to mid-sized business owners.
Mhm.
Third, they invested in commercial real estate. Now that changed somewhat because of COVID and what's happening with real estate. The only two times money came involved, they either worked on Wall Street, made a lot of money selling financial advice, or they worked for publicly held companies with significantly high, got a lot of cheap stock options and made money. I don't think I've met three or four people over 40 years that came to me and said, "Hey, mom and dad stuck 5 or 10,000 into the market every year. They're worth 3.5 million now."
Right.
So I think we have to lower our expectations on what we think markets or people like me or whatever can somehow make for us. Remember this: if the bank is paying you 1 to 3 to 4%, at best double that. And anything past doubling that is going to have a lot of risk, no matter what anybody paints or says about it. In order to pay you or make something that's 12% now when banks are paying 3%, there's substantial risk of principal, and let nobody fool you differently.
Right. Peter, there's so many other things that I would love to talk to you about, but we'll have to do it another time because I think we're getting close to the end of our time with you. Any final thoughts as we start into this year, and then we'll have you back maybe in a month or two to kind of recap where we are.
Well, I think that a couple that I just shared with somebody this morning that are on my mind that I'll share with you. I told them that, like that person you spoke of, they've gone down the wrong road and now losing money. And I told them the ultimate crime in investing has never been wrong. I've been wrong enough times we could spend 5 shows talking about it, but it's staying wrong. And then the second is, and this is regarding all markets, it's an old saying, but it should be stamped right on front of your computer, especially if you think you're going to trade and be successful. There are bulls, bears, and pigs. The bulls and bears will each have their days, but the pigs always go to the slaughterhouse. I'm watching people now coming to me and saying, listen, I'm up 600% in something.
Mm.
They haven't even taken out their original investment yet. And so I think that motto is really, really key. And to recognize that one of the most misquoted, this is be the last, but the most misquoted scripture out there is money is the root of all evil, is what
Yeah.
most people say. But that isn't the scripture. The scripture says the love of money is the root of all evil. If you think money and money alone is going to achieve the successes and things that'll make you happy, I will speak firsthand and know many people I think would share the same story that having it doesn't necessarily bring success. In fact, Wall Street would want you to think that the guy that owns the bus company is always happier than the guy driving the bus. But some of the best people I ever met were people with little or no means that were the most happiest. And some of the most unhappiest people I ever met were very wealthy people, including professional athletes, some who were making 100 million or more, and still were one of the most unhappy people, and that I did not want to be around. So hopefully that can help someone.
Yeah. Thank you so much again, Peter. Remind people how they can find out more about you.
This is all for but the Bitcoin people. Bitcoin people do not listen to this part. But the petergrandich.com is the website. I'm on X page. I have an X page where I do a lot of my day to day thoughts. And then I have a YouTube channel where I get to interview people like yourself and also share great interviews like this. And they can all be found, like just putting my name in Google, I guess.
Super. Well, thank you again for coming back and sharing all these thoughts. And we hope to have you back again before too long.
Thank you and God bless you. And I hope the work that you continue to do, which is very viable and necessary, I hope it grows 10 times more this year than last year.
Thank you so much, Peter. And thank you to all of our viewers for tuning into Collapse Life. It is great to be back with you. And if you're new here, please don't forget to hit the subscribe button so you never miss an episode. You can also explore more of our content at collapselife.com. You'll see our blog, our shop, and links to all our social media channels right there. And then join us next week again for another deep dive into the unraveling of modern civilization. Collapse Life is the thinking person's guide to navigating the current chaos. We look forward to seeing you again. And until then, just remember, keep your chin up. It's only collapse. See you next time.